Right on answer. In calculation of the working capital, we will have stock of raw material. It is raw material consumption divided by 12 months into raw material holding period. The consumption for the entire year is an amount of 9 lakhs divided by 12 months into raw material holding period is provided to us as 1 month. So it is 9 lakhs into 1 divided by 12. That comes to 75,000. WIP, work in progress. It has been provided that it is 0. Finished goods, in that it is COGS divided by 12 months into finished goods holding period. So cost of goods sold, it is 25 lakh 80,000 divided by 12 months into finished goods holding period. It is 1 month. That is the way finished goods stock will be found. 2 lakh 15,000. Next is debtors. Cash cost of credit sales divided by 12 months into average collection period. Cash cost of credit sales is 29 lakh 40,000 divided by 12 months into average collection period, which is provided 2 months. So 29 lakh 40,000 into 2 divided by 12, 4 lakh 90,000. That is the way the amount of the debtors can be calculated. Next is cash balance. It is an amount of 1 lakh. Next is prepaid expenses. In that, annual expense, that is sales promotion expenses, divided by 12 months into average collection period. I'm sorry, into time period. Quarter means 1/4. So we understand it's the 12 divided by 4, 3 months. 3 months expenses are paid in advance. 1,20,000 divided by 12 into 3. That comes to rupees 30,000. That is the way prepaid sales promotion expenses. Next, almost all current assets are done. Advance tax information is not given, so we are ignoring it. So now we'll start with the liabilities. Creditors for raw material. In that, annual credit purchases divided by 12 months into average payment period. Dear students, we have just understood that for an ongoing company, we have an assumption that opening stock and closing stock would be same. That is the reason, so the purchase will be equal to the consumption. So we are supposed to take the purchase an amount of 9 lakhs for the purpose of making calculation of answer. So it is 9 lakhs divided by 12 months. Into average payment period is given to us in the question as 2 months. So 9 lakhs into 2 divided by 12, 1,50,000. That is the way creditors for raw material is calculated. Next is creditors for expenses. Coincidentally, wages 1 month, cash manufacturing expenses 1 month, administration also 1 month. So we can club all of them to compute the answer. So it is outstanding expenses. In that, direct wages plus manufacturing expenses plus administration expenses, whole divided by 12 months into average payment period. Amount of the direct wages is an amount of rupees 7,20,000. Cash manufacturing expenses are 9,60,000. Administration expenses 2,40,000 divided by 12 months into 1 month. This is the way we are required to compute the answer. 7,20,000 plus 9,60,000 plus 2,40,000. 19,20,000 divided by 12 into 1. 1,60,000. This is the way we are required to make the computation of the working capital before margin for contingencies. Then margin for contingencies will be added to compute the overall working capital requirement. Try to complete the remaining answer on your own and put your answer in the chat box. So we'll have the final answer like this. We'll start with the raw material stock 75,000 plus WIP 0, finished goods plus debtors 1 lakh rupee is cash balance, prepaid sales promotion expenses 30,000 minus creditors 150 minus creditors for expenses 160. So working capital requirement before margin for contingencies. It is 6 lakhs. Add margin for contingencies. Six lakhs into 20%. That is 1,20,000. Based on that, so the total working capital requirement. Seven lakh 20,000. Please take down answer. So step number 2 in that working capital, stock of raw material, finished goods, debtors, cash, prepaid sales promotion expenses, outstanding expenses, working capital before margin for contingencies, and the total working capital. That is what we have done. For an ongoing company, cash cost of the sales is calculated as material consumption plus direct wages plus cash manufacturing expenses. That will give us the cost of goods produced and sold plus administration and selling expenses will give cash cost of the sales. Opening stock and closing stock of the raw material is assumed to be same. Opening stock and closing stock of the finished goods is again assumed to be same. So cost of goods produced and cost of goods sold are same. Material purchase and material consumption would be same.